Welcome to the Tear Sheet Podcast, a special edition here on site at FIS Emerald 2025. I'm Tear Sheet host, Zach Miller. This roundtable will dissect a critical challenge facing the financial services industry called the Harmony Gap, the disconnect between fintech innovation and traditional financial systems. Leveraging new research from FIS and Oxford Economics, the panel will illuminate the nearly $100 million average annual loss businesses face due to cyber threats, regulatory hurdles, and other inefficiencies within their financial ecosystems. We'll explore the economic forces amplifying this gap, and crucially, how strategic fintech adoption can bridge the unlocking tangible ROI, fostering stability, and driving sustainable growth in an increasingly uncertain global economy. And to help me do that, we'll have CTO of FIS, Firdaus Bhathena, and Margaux McLoughlin of Oxford Economics. Thanks for joining us, guys.
Thank you.
Happy to be here.
Let's jump right in with a really super important question. We're here on the ground in Orlando. What's your favorite Disney character and why?
Growing up, I loved Snow White a lot. Yeah. Everything she could do with animals was my favorite thing.
Okay.
So, yeah.
Very good.
I have two daughters, so Cinderella.
Okay, and why? Because of the daughters?
Because of my daughters and how much they enjoyed it when we brought them. They're much older now, but when we brought them to Disney when they were young.
So let's jump in. Let's define the Harmony Gap. What is the Harmony Gap?
Before we can get into the Harmony Gap, the basis of the research began with the money life cycle.
Okay.
So we broke the money life cycle into 3 stages, which was money put to work. So think of things like trading or lending, places where it can appreciate value. There's money at rest, so core banking or digital banking, and then money in motion, so payments, wire transfers, places where money is moving. And when money is able to flow across these 3 stages and within the stages, the money life cycle is in harmony.
Mm-hmm.
When there are disruptions across the money life cycle, that's what we call disharmony. So the Harmony Gap, we wanted to look at disharmony is affecting organizations and what they're doing and what technologies they're using to breach that gap within their organization. And we found a lot of interesting insights from that research. And we were actually able to quantify the total cost of disharmony for organizations. On average, it's costing them about $100 million annually. And we have a lot of other very interesting findings as well.
I'm sure we'll jump into that.
Yeah. You know, at FIS, we spend a lot of time with our customers. I meet at least 2 or 3 of them every week in my job here. And it's the favorite part of my job. And we were hearing about a lot of the challenges and friction that they see in the money life cycle, whether they play a part in, one part of the money life cycle or across the money life cycle, at rest and motion or at work.
Mm-hmm.
But we had not been able to quantify that. And so that's when we turned to Oxford Economics and we said, there's got to be a way to actually quantify this because we're a very data-driven company. Our CEO is always exhorting us to be data-driven, really focus on where the action is based on the data. And we were like, we're talking about all these problems we see, but we don't know how to quantify it, which means we don't know exactly how much we should be investing in trying to fix some of these and what the benefit is going to be. Everything in our business is, based on ROI and rate of return. It's the financial industry after all. And so that's why we turned to Oxford Economics and we said, help us figure this out. You're the experts in this area, and we're very, very pleased with the results. Thank you.
Of course.
I want to double click on something you said, Firdaus, the challenge of measuring this in a concrete way. What are some of the challenges? Does it have to do with siloization of the industry? What makes this a challenge to really figure out what the impact is?
So, it's a challenge for people who are not sort of in the business of professional research, right? That's why we turned to a partner.
Mm-hmm.
Doing this ourselves, we could have struggled with it. We could have put spreadsheets together and, we have so many customers, we love them. We want to help them. And we have a lot of businesses across the money life. I mean, FIS is, I'm proud to say, one of the, only companies in the world that actually touches every aspect of the money life cycle in a significant way, not just with trivial, 1 or 2 products, but really core products in money at rest, money at work, and money in motion. Collating all that and doing it in a way that's rigorous from a research standpoint is not in our wheelhouse. That's not sort of our core capability. And so we needed to turn to somebody else to help us do that.
Totally understood. Can we talk about maybe some of the causes of this disharmony?
Absolutely.
Yeah.
So, in order to find the cost of disharmony, we had to identify what the actual sources of it were, of course. And we identified 9 key sources of tension. I'm not going to name all of them right now. You can see that more detail in the
We'll
research
link to it in the
report.
show notes as
Sounds
well.
great. But some of the key sources of disharmony were cyber threats, fraud, illiquidity, operational inefficiencies, issues with regulatory compliances. And in order to actually find the annual cost of disharmony, we surveyed 1,000 executives across the US, the UK, and Singapore, across large organizations, and asked them to estimate their annual cost for each of the sources of tension. And we put together all of those costs, took an average, and found that $100 million figure. And what's really interesting about that, too, is from that $100 million figure, about a third of it is coming from cyber threats. So that's probably the top concern for organizations right now. All other points are important as well, but a third is coming from cyber threats.
So you looked at these 3 different geographies. I assume there's differences in geographies based on that, but you took an average number.
Yeah, we took an average number, and it was about a 50-50 split from UK and the US, and then we had a smaller population come from Singapore. And we also had varying revenue brackets as well. So you can actually see we have an interactive dashboard, and you can see the breakdown between different geographies and different revenue brackets, as well as your industry, to see how disharmony can differ across the different industries, regions, revenue sizes, because there obviously are going to be some differences. If you're a, $50 million revenue company, the cost of disharmony is going to be smaller than, a $6 billion organization. So you can see that difference there.
Does that match up well with some of the things you're seeing with
It
your
does.
customers?
And what Margaux just said is really important to us because, again, we want to be data driven, and sometimes looking at it in aggregate is interesting from sort of a high level perspective, but we want to get down to the next level of detail. So being able to sort through the data the way she described right now has been really valuable for us. We have some of the largest customers in the world in financial services, and we actually have, hundreds or thousands of, small financial institutions as well as our customers, and we care about all of them. And we operate at a scale that, isn't readily apparent to anyone. Before I joined this company, I kind of knew about the scale at which FIS operates, but I didn't really realize how big and widespread it was. So, which is why taking this international approach with the study was really useful, because we are an international global company. And typically what happens in one part of the world eventually starts to affect other parts of the
Sure.
world as well, right? I mean, it's a global economy. The world is a small place now. And, I'm willing to bet that, the cyber threats were the number one cause pretty much everywhere.
Yes, they were.
I'm not the researcher here, but I'm willing to, bet good money on that. And that shouldn't come as a surprise to anybody. But actually being able to quantify it and not just speak about it in qualitative terms has been extremely useful. Because now you can go to a customer and say, it would make sense to invest this amount. As a strategic advisor, we like to think that like the role we play with our clients, most of them is we're not just a software vendor.
Right.
We are actually a strategic advisor, and we say, let's talk about not what you want to buy, but what your problems are. How can we solve them with you?
Absolutely.
And what do you think about awareness? Like, how aware, or what level of awareness are the companies that you talk to about the Harmony Gap?
So I would say that they're aware in some ways and not aware in others. They were able to quantify how much it's costing their organization, but I would say that the lack of awareness comes with understanding what to do about it. In addition to the survey, we spoke with a number of executives across different Fortune 500 companies, a lot of banks as well, and just to get some of those qualitative stories in addition to the surveys. And we found that there were a lot of gaps in organizations as far as how to approach all of these areas of disharmony. So, they're able to identify where the sources are coming from. So cyber threats or fraud, every organization is aware of them. They have training on them. They have the right, they have technologies in place to try and deal with them. But there's still a lack of, similar to what you said, a strategic approach in embedding the technology, having the right technology in place, and understanding where their real weaknesses are.
No matter how large your organization is, you're always competing for resources, correct? Like no one has infinite resources. And so
There's always an infinite number of problems.
that's right.
Right.
Exactly.
How do you
right,
prioritize?
Right. How do you prioritize?
Right.
Like how do, if I go to Stephanie, our CEO, and I say, we need to make a certain investment, I better be prepared to explain why, right? And so with the experts at Oxford Economics to say, help us with the next level of detail on this, because no one is going to deny that cyber threats are an issue or fraud is an issue. But how much do you actually invest in fixing it? What are the right approaches? What is the next level of detail? Who else is it impacting? And I learned something from my peers and the industry around me. I think the financial industry, there's something really special about it, which is that in certain areas like cyber threats and fraud, it is in our collective best interest to work together to make the world a safer, better place. It doesn't help anybody. It doesn't help Bank A if Bank B suffers from a cybersecurity attack. It lowers the level of trust for everybody. You might have heard in our session this morning, like trust is a fundamentally important driver of the financial industry.
Absolutely.
And it's been that way for decades, if not centuries, right? And so working together is key to making sure that happens. And so being able to get this broad swath of data and then extract signal from noise has been extremely valuable.
Absolutely.
So who are the winners and losers in this scenario? The fact that we have this disharmony gap, who loses here and who wins?
I would say that no one really wins if there's disharmony occurring. So it not only affects an organization, it affects their customers as well. If their money isn't able to move to where they want it to go, if a cyber threat occurs, if there's fraud within an organization, they lose trust, but they also don't have access to their money.
Sort of like a negative tamper on the whole industry.
Absolutely, yeah. And similar to what you said, is there's that reputation loss not only for your organization but across the industry as a whole. And I would just say that no one is really winning, but if there can be harmony with an organization, it not only affects the organization positively and increases efficiency and increases opportunities for innovation, but it also enhances the customer experience. Customers are happier, they have better access to their whether it's their money or whatever product an organization is serving for them. They're happy as well, which we're all in the business of making customers happy. So
a bit of a positive halo effect.
Absolutely.
I would say the only winners, if there are any, would be bad actors, right?
Absolutely.
Yeah, disharmony creates ripe opportunity for bad actors to take advantage of the friction in the system. And the people who suffer the most are the people we care about the most, our friends and family, our consumers, all around us, right? I mean, a business can withstand more. I mean, let me give you a very personal example, if you will bear with me, on a money in motion disharmony that, gave me a lot of, stress. A couple of days ago, actually yesterday, Monday, we just became empty nesters. Our 3 kids are grown up, and so it's a very personal example. And we sold our home, and we're moving into the city, and we're downsizing. And the house closing was actually yesterday while I'm here at Emerald, busy with our clients. Now we're waiting for the wire transfer to come through, right? And it's taking longer than expected. Turned out it wasn't a financial problem. It was more a legal thing. Somebody didn't sign something the right way or whatever it was. But here I am, at Emerald, trying to focus on our customers, and my wife is sending me anxious text messages saying,
stress to your life.
is this actually going to happen, right? And it needed to happen yesterday, or we would be dealing with a bunch of other stuff. And so it's even, it impacts us in our daily lives. After your family, your health, your financial security and stability, I think is what's really important to most people. And we want that to be as pain-free and friction-free as possible.
Thank you for that personal example.
Yeah.
Maybe we can talk about some of the things that help to put the industry back into harmony.
Sure, absolutely. So, from our research, we were able to develop some strategic recommendations for organizations, and we have four pretty clear ones. So, the first one is to prioritize and integrate advanced technology into your organization. So, making the right decision about which technologies you're investing in. So, AI, machine learning, and understanding where and how they're going to benefit your organization when you integrate them. So many of these technologies can be used not only to protect from cyber threats or fraud or to keep up with bad actors who are actually using AI in a lot of areas now, but they can also increase operational efficiency, decrease human errors, a lot of those areas of disharmony. And along with that prioritization of technology, investment, and integration, we actually found that a lot of organizations are creating these dedicated financial technology teams within their organization to help strategically either buy or create and then roll out within their organization a financial technology solution. And then second is to make sure that your talent within your organization is educated on all of these areas of disharmony. So having a very cyber aware organization is very key in order to reduce the amount of disharmony in your organization. You know, we all have to do those fraud and cyber trainings every year. You get those random emails that come in and you accidentally clicks the link and you get an error message. But we found that it's just not enough. You know, you have to stay up to date, especially with how quickly technology is advancing and how quickly bad actors are advancing with new technologies like AI, like I mentioned. So that's really key to taking the next step to protecting your organization. And a third one is also to engage in strategic partnerships. So using strategic partnerships, integrating new technology, and also figuring out where your weak points are within your organization. They tend to have the talent to back up the integration of technology and also to help with a seamless flow, especially if you don't have the talent within your organization to integrate it. So those are some of the key strategies that we found from our work. But I would say one of the key points is just to be very strategic about how you're using your technology. And you also have to understand where the points of tension are within your organization in order to act on them.
So it sounds like there's some internal motions that companies can take and some external ones.
Absolutely.
Almost like ecosystem building, right? The right partners and the right technologies. How does that align with some of the things you're hearing from your clients?
You know, I'll just double down on what I said earlier. Like sometimes you feel like, that you have to go it alone, or you can only work with like technology partners. I think it's very important to work with your peers in the industry too. And sometimes that might mean working with people that you actually compete with in certain areas, right? And you can be smart about that. You can pick and choose the areas in which you work together. But, I'm a big believer in sort of the platform approach where, a rising tide sort of lifts all boats. One-off solutions are fine if like you're trying to solve a very here and now tactical problem. But if you really want systemic change and you want to make, long-term impact, and you don't want to use the strategy I use at home with my dear mother-in-law, which is to keep her safe, I tell her don't click on anything. Right? That's not going to work.
Don't open your email.
Right.
Yeah.
Don't open your email. Don't click on any links. Like ignore every text message you get. Like that doesn't work. We want that harmony in the money life cycle, and telling people stop using all these things is not going to work. So I'm glad you talked about technology, Margaux, because it would sound very self-serving coming from the CTO, but clearly the only way to fight friction and bad actors and cyber threats where they are not in a regulated industry, are they? Right? They've got nobody sitting over there
Got all the
watching
tools
over
and
them.
no regulations.
They can do whatever they want. The only way to fight that is with awareness, technology, the right training for your people, and the right processes.
Absolutely.
So with this research in hand from Oxford Economics, where do you go with this as CTO of FIS?
So first of all, we're very happy to share this with our customers. Like I said, we are grateful to our customers that a lot of them view us as their strategic partners in this journey
In this
that we're
framework.
on together, right? And so sharing this data with them very openly and saying, no one's perfect. Here are the things that we found. Here's a way to actually quantify it. It's not one size fits all. So we sit down with them and we use Oxford's help to actually figure out how can we tailor this now to some client interactions, and then based on that make some recommendations. Now we're not sort of using this only to sell more of our products. Like there might be part of what the things that Margaux said that are really spot on in terms of what you need to do might require, we don't build training tools, for example, right? But we can recommend some that we use ourselves. So we're executing on a lot of these strategic recommendations. We take the lessons we learn. We stub our toe. We stumble sometimes. We figure it out. We make a mistake. We go talk to Margaux and her team, and then we make progress. So, for example, we're putting all of our teams through some fairly intense training on the risks and the benefits of Gen AI. And we believe that an educated, informed workforce is really good for the company, it's good for the individual, and it will, help spread the goodness over time.
How long do you imagine that this research has been published? You're going out and having these conversations with your clients and your prospects. How long do you think it takes before the industry starts to pay homage or to acknowledge that these are the quantified effects of the disharmony?
I'm happy to say that our industry is very alert and responsive, and it does not take long. Now, part of it, I'm proud to say, is because of the trusted relationship that FIS has and the fact that we worked with a world-class firm, not trying to flatter you, Margaux, but it was actually very well
Take it.
executed.
Yeah.
And the fact that we actually used an external world-class enterprise to actually do this, so it's not like a self-serving thing that FIS did. So this independent study, is something that we take to our partners and our customers, and they're engaging immediately. This industry is very used to being extremely responsive because they truly understand the great responsibility that they have. And I say that with, all of that respect going to our customers, not to us. We support them in achieving what they want to achieve, and what they achieve affects us in our daily lives, literally in our daily lives, right? That not a day goes by when you're not doing something that has something to do with the financial services industry.
This was a fascinating conversation. I thank both of you for joining us on the Tearsheet podcast today.
Okay, very nice to be here.
you.
Thank you. Thank you, Margaux. Thank you, Zach.
Let's wave to everybody out here. Hello, everybody.